Hello, traders. It's 8:01 a.m. on Thursday, the 16th of May, 2019, 8:01 a.m. Chicago time. Thanks for joining me today. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market stance allocation to risk this morning. The market is trading a little bit higher across the board. It's really not very aggressive higher. The DAX is relatively strong. It's leading the pack after crude oil. Crude oil up 93 cents or 1.5%. DAX is up 81 points or 0.67%, followed by the Euro stocks, the Dow, the S&P, the Russell, and then the NASDAQ is teetering on unchanged for the session, trading up 2 to 3 points from its settlement yesterday. And then we see all these safety instruments are below the zero line. The Bund is down just slightly, 2 ticks, and the bonds are down 8 ticks, with the notes down 7.5 ticks, and gold down $6.20. So it's a slight allocation to risk this morning. What's likely to be ahead of us today? Well, what's driving this? Overall, same old, same old. There's nothing new here to report. China Commerce Ministry's Gao echoes sentiment from the Foreign Ministry spokesman, reiterates that China strongly opposes U.S. bullying, urges U.S. to cancel tariffs on Chinese goods as soon as possible to avoid causing recession-like impact on world economy, expresses no knowledge of plans for U.S. trade delegation to visit China, and so on. And so that's really what's on deck. Trump signed an executive order banning the purchase or use of communications technology that poses a national security risk, as expected, and I think that's aimed at Huawei. So there's this battle still ongoing. Yesterday, as you probably are aware at this point, out of nowhere, POTUS tweeted that he's expecting to hear about the success of Chinese talks, U.S.-Chinese talks in 2 to 3 weeks. And so the market popped pretty strong and turned into a trend day up. It's fun to have those little surprises like Jack in a Box. And so that's where we are. Let's review what we expected yesterday in our review segment. By the way, let's do this again this morning and have, while I'm talking here, have everybody just put down the city and country that they're hailing from, if you would just put that in. The SOC for that is 282075 in the S&Ps, 282075. So if you just put in your city and country, we can see what diversity we have here. We've got a ton of diversity at Convergent, people from all around the globe, and I want to see how many there are here in the Trader Bite. Thank you. So yesterday, the primary scenario, because we after reversing up on Tuesday, we opened up in a slight gap down on Monday on yesterday's session. And we started to build quite a bit of acceptance above before we sold off, and we ended up with a spike down and a pullback and a continuation to new lows. As that image shows here, you can see that the last print is also the overnight low, and so. We were pushing lower. And so the expectation yesterday, the primary expectation, if the auction was to operate in an orderly way, the most likely play is, holy cow, there are a lot of people in here from all over the place. This is, by the way, in the live chat on YouTube. The expectation is that the market's likely to be responsive and that we're likely to run into some pretty good resistance at 38, 33.50 through 35. And and then to roll over and start pushing lower to find those buyers, likely to take out that 2802 test below 2800 before the next move. The scenario that actually worked, it was scenario 3, to push down, find buyers, and then push up and turn, and then it turned into a trend day. Now I expected the same kind of response. You could see that there's some chop there, the same kind of response from scenario 3 at 33.50 to 35. We did get that, but the news came out just before we got there. So here's what actually happened. So we opened at the 28.18 and a quarter. We tested down pretty good to 15.75. We turned around and then we started to push up. And as we pushed up into this 33 and a quarter area, we actually did get a response on a smaller time frame. We got some chop in there before the news came out, just before the news came out right here, and it was an impulse into that 35 area, pullback, and then we had a continuation move again into 35, at which point I actually got short, expecting that this news event with its slow continuation is likely to fail and roll over and start moving back down through to 28.26. That's what I expected, but instead it just it rolled over all right here, and then it wasn't enough to give a scale out, and then it started to squeeze higher, and it just continued to squeeze and squeeze and squeeze. Range extension up. The profile shows multiple distributions of acceptance and rotation with a weak high. And remember from 2 days ago that 58.75 was a key area. It's marked here as a stock zone in red. And that kind of put an end to the buying at 28.60. We tested it initially at 58, pulled back. We pulled back about 7 or 8 points, and then we pushed back into that 58.75, and we managed to squeeze 5 ticks out of it to 60 before holding steady. The market finished with the point of control in the upper quartile in what looks like almost like a trend day profile. So the expectation is the market is likely to finish this auction to the upside in extended trading hours, and that's what it did. So that carries us into extended trading hours. So here it is. It actually ended up pulling back, and then ultimately we're pushing these highs. We ended up with, in the overnight session, we end up with this profile that looks an awful lot like what we had yesterday. Again, the point of control overnight is in the upper quartile of the range. The volume is only twice the norm. It's only twice the norm versus the 3 or 4 or 5 times like we've seen over the last few days. Things are calming down. The market, as it rallies, tends to contract in terms of range and volatility. And this is kind of symptomatic of that. Volume starts to drop off. Positions have been taken. Remember, I want to remind you that Monday we finished the day with the delta being strong while price was lower. Do you remember that? I discussed that, and I said it looked like accumulation to me. Well, those people are getting paid over the last couple of days. Those people have been getting paid on that accumulation on the way down. There's a tendency to form a low in that type of movement. I would suggest you go back and look at Tuesday's Trader Bite to see how that is. Anyway, so that's where we are. The overnight session shows a pretty decent area between 57 and 60. We want to see if the market holds that on the open as a first indicator or first mark in terms of what its intentions are. So let's move on to today. What are we expecting? There we go. Blink. I know this is always asked for, so let me take a moment to show you my CT book map. Here's what the overnight order flow looks like. So we closed right here, reopen, close for the session, and then we reopen, and then we immediately go down. Let me move this brighter stuff, higher volume stuff out of the way, and we can see what has been here for a while. We can see that at 55 there was some size there that actually traded out. At 60, which is another strike, some size that traded out. 65, some size was put in, but it was canceled, and so on and so forth. It looks pretty balanced in terms of bids and offers. Let's zero in a little bit here. So not much to glean from the order flow so far. We see some size up there at 70, which is the next 5-point strike. So that's probably that's likely to trade out. There's really not much here to glean from the order flow. Okay, you can get the software at ctbookmap.pro. All right. So what are we expecting today? So tricky open here. The expectation this morning, we're right underneath this this overnight point of control. I expect this to test it quite early, but I'm looking for a reversion back to 2852 and potentially down into 2850. I'm looking for this to hold steady into the 2850 area and then start to push up. But I'm expecting mainly a balanced day today. So I would not get overzealous with the breakout trade today. The range is likely to be somewhere exceeding the overnight high or low probability wise, but overall I'm not expecting real magic today. I'm not expecting this to sell off hard, and I'm not expecting it to push higher in any progressive way. The next key area up is 2884.50, key area, but there are some stumbling blocks, one of which was the overnight high, 2867 stock zone, 2868 overnight high, and then 2875 and a quarter. 2884 is well within range from where we are. So if we do take on a bid, this is likely to be the key target above. So again, expecting a balanced day. I'm expecting a profile that is probably going to be some form of a two distribution balanced day. This is what I'm looking for today. I'm expecting the day to rest. There's really not much on the calendar as far as the calendar is concerned. We got the building permits and housing starts already in Philly Fed. Philly Fed came in pretty strong. But other than that, the calendar's clear except for some central bank speakers. We have a central bank speaker from Germany, the UK, ECB's Kerr, and there's a Eurogroup meeting today. Not really expecting anything big. And I think that given the last 24 hours, my expectation is the rhetoric and the tweeting and the responding on the trade war is likely to take a back seat here. As Treasury Secretary Mnuchin said, they're not aware of there's nothing on deck with the Chinese at the moment, and so I expect things to be calm and the market to run under its own power. So I'm expecting a rest day, a balancing day, as the market has nothing new to price into the auction. So expect it to be quite balanced. Secondary scenario, I'm looking for it to be initiative at first, take out the 2868 area, flail around, and then come back to the point of control and then push down into the 2840, come back and hold steady at 2850. More aggressive tests up and down, and then finishing sideways is the most likely scenario there. Okay, so what's there to say? What's left to say? Not much. You know the drill. Be patient. The hardest part of trading is waiting. just because you're sitting in front of a screen. As we sit in front of a screen, we want to do something. Otherwise, we feel useless. And this is not quite the business to do that in. We really need to see that the market is handing us good information before we act on it. Be smart. Again, I'm going to remind you, if you're trading an account that is less than $3,500 per contract in the U.S. indices, you really should be in the micros. You should be in the micros. You should not be in the minis. If you're trading an account less than $3,500 per contract, that is the reason behind that is somewhat statistical. If you're trading for half the initial margin, your risk of ruin is greatly diminished. As you push the $500 per contract margin limit, your risk of ruin is tremendous. I mean, it takes very little for the market to move in order to wipe out that $500 per contract. Okay, so move into the micros. They're quite liquid. They trade quite well. There's no excuse not to be in there if you're trading a smaller account. And even if you have a large account but you're not consistent, then go to the micros and trade at least 3 contracts at a shot. And again, look in the description or actually look on my Twitter. I'll post it again for the webinar with Futures.io explaining the plan for trading the micros. I put that out there, and then the video in the description. I discuss the micros again, but I also provide a simple setup that I use consistently. The mid, just a contribution or a donation to the community. You might want to look at that as well. Good luck.